Hello and welcome back to another video on how to become a business consulting freelancer. So the point of this video, right, is to make a quick recap of the beginner guide to financial statement. So sec.gov provide this uh, HTML document, okay, where now they tell you that, okay, learning the basics is not that difficult, and if you can read nutritional labels or baseball or soccer box score, you can learn to read basic financial statement. And if you can follow a recipe or apply for a loan, you can learn the basic of accounting. And the basic, they're difficult. They're rocket science. So much like, and I really love this example that they use, much like when you go to learn how to perform cardiopulmonary resuscitation, where they teach you how to do that, they won't train you to become a cardiac doctor, much like similar here. So this beginner guide is to learn to understand the basic part of the financial statement, so when you're able to see a set of them, you are confident enough to make sense of them. So financial statement, after all, they show you the money. From the Cuba Gooding Jr. in Modern Lines from Jerry Maguire movie, show me the money. That's exactly what financial statements do. And you have four of them. You have balance sheet that show what a company owns and what it owns at a fixed point in time. Income statements show how much money a company made and spent, again, over a period of time. The cash flow statement that show the exchange of money within the company and the outside world, again, over a period of time. And the shareholder statement, which show, or the statement of the shareholders, which show the changing interest of the shareholders over time. So this sections only focus on three of them. The first three: balance sheet. The TLDR is a snapshot of the company assets, liability, and shareholders' equity. Income statement. The bottom line of this show if a company earned revenue or not. The net income. And the cash flow statement report the company inflow and outflow of cash. And this is important because company needs to have cash on hand to pay this expense and to purchase assets. So while the income statement can tell you whether a company made a profit, a cash flow statement can tell you whether a company generated cash over a period of time. And this is made, or typically it analyzes the cash flow from operating activities, financing, and investing. So the first operating activities, okay, what it does is to conciliate the net income from the income statement to the total cash that was used or perceived from operating uh, assets and liabilities. So for operating operations. So this is like this. What you are is this, right? So the first part of the cash flow statement analyze the company net income from the income statement and conciliate or reconciliate the net income to the actual cash that a company receive or use in its operating activities. Operating activities that involve day-to-day operations. So to do this, it adjusts the net income for any cash. Yeah, it adjusts the net income for non-cash items, items that affect the income statement, such as amortization or depreciation, stock-based compensation, which are stocks provided to employees as a form of compensation. There is no cash involved, but there is some value in the exchange. So that's the idea of non-cash items. There are not a cash flow. Okay, there are not uh, any cash flow. So they are not cash transactions. When we mean with non-cash items, we mean is items that affect the income statement, that they are not a cash transaction. And it also adjusts the any cash that was used any cash that was used or provided by other operating assets and liabilities. So this is the two things that it does, right? This operating activities, which is the first section of the cash flow statement. So it analyzes the net income from the income statement and reconciliate with the total cash that was used from or perceived in its operating activities. Okay, so when I ask myself, what are the most common operating activities? So you have operating assets and operating liabilities. So operating assets, you have inventory. Uh, yeah, you have inventory, prepay expense, which expense that you have in advance to enjoy for good and service, such as premium insurance like home or vehicle insurance to protect that in the case of damage or any unforeseen damage. The health for medical coverage, liabilities such as lawsuits, disability in the case you suffering an accident that prevents you from working, home health care or long-term care like home health care, nurse home care. Another prepaid expense is marketing, uh, office supplies, rent, software licensing or maintenance contract. Keep looking at other operating activities. You have the property, plant, and equipment, intangible assets such as patents, exclusive right to provide, yeah, exclusive right for inventors so they can distribute, sell their inventions over a period of time. Here we have is from Popular Mechanics website uh, a couple examples like the maglev, this electromagnetic stabilization and suspension system for ground vehicles, issued in 1969. The GPS, which is something that we use daily in our life, like from the patent name, navigation system using satellites with passive ranging techniques, issued in 1974. Electronic device, or AKA the iPhone, issued in 2007. The Chris gene editing in 2014. And then I also look at other intangible assets like the trademarks, which are exclusive or our image, designs, audio that uniquely identify this company from the competition, such as the immortal lines of Mike, Michael Buffer, Michael Buffer, uh, let's get ready to rumble, right? And also look at copyrights, exclusive rights to creators of original works like Netflix, Spotify, Twitter, to use their invention or to use their uh, creation exclusively over a period of time. So they can use, manufacture, and sell that over a period of time. Trade secrets, which is the exchange of confidential data amongst uh, companies, operations, customer lists, or process, which is something. This is how the Chinese companies have earned a lot of their their competitive advantage, uh, and also you have is the goodwill, company brand, reputations, and customer loyalty. Keep looking at other operating assets like investment in affiliates, such as joint ventures, where now it's a partnership between one or two more companies, two or more companies to undertake a specific business activity or a project where each one of them receive a share from that. Examples, Crocs and Post Malone. That's actually pretty interesting. I will encourage you to look at that. Equity investment, uh, well, where now company purchase significant stake on the another company's stocks to gain some influence and potentially raise a voice in the another's company operations, such as equity investment. In this equity investment, we have to let Berkshire Hathaway, led by Warren Buffett, where that multinational holding company, and holding company is a company that interact with other business through owning stocks. Uh, so they invest in a variety of sectors like energy, retailers, and real estate. We also have SoftBank, which is a Japanese conglomerate that invests primarily in technology companies such as Uber, WeWork, is famous investment, and also is famous unicorn that it turns out to be a goat. It turns out to be a snail. Another example is Alphabet, the parent company of Google, that invests primarily in technology company as well. An example of that is Calico, this longevity company, as well as TPG, this Texas Pacific Group, a private equity investing firms that invest in a variety of sectors, real estate, home, or healthcare. Uh, their most notable investment is Be Just, which is a slightly competitor of Khan Academy, this educational online platform. Khan Academy is headquartered on San Francisco, while BS is on Bangalore, India. And then I also look at Blackstone Group, okay, which is an investment firm that invests again in a variety of sectors: home health, retail. Keep looking at investment in affiliate. We have is limited partnership, where now an investor of a company may invest or purchase stocks to earn the or to control the companies or the limited or the partnership assets and operations. This is somewhat very some moody waters. This limited partnership, and also we have these associates, which are investors that hold a significant amount of stocks on the company in the range between 20 to 50%. Uh, and keep looking at other operating assets like money, the cash and cash equivalents like money market funds, which are funds that invest in a very short term debt products, such as bank deposits or debt short term debt issued by banks, savings, certificate of deposit, certificate of savings issued by banks with short term maturity, commercial papers, very risky, com- uh, very risky and short term business debt, and repo, repurchase agreement uh, issued by the government, short term debt issued by government. All of this is what Investopedia talk about that, right? And once I look at the operating assets, then I take a look at the operating liabilities, such as accounts payable. Another important operating assets before jumping to the operating liabilities is accounts receivable, okay, which are money that the consumers owns to you, or your providers and vendors owns to you. And when I look at the operating liabilities, such as accounts payable, money that a company owns to vendors and providers, or suppliers and vendors, and the subtle difference between them is that suppliers are critical to your business, so they need that. While vendors does not, so they improve your business. So in any case, another operating liabilities is sorry accrue expense, which in Spanish is gastos acumulados. So accrue expense are expense that a company may in advance for good and service, uh, such as salary, wage, rent, utility, taxes. Then I look at deferred revenue, which are obligations that a company has for money that has been collected. So future obligations that a company had for money that has been collected. For example, we have uh, for example, we have is Netflix subscription, or any subscription service, Netflix, Spotify, subscription service. Gift cards is another one. Maintenance contract, software license. Okay, if you're a company that provides software, you have a license that you provide to ensure that the customers over a year receive the best of your products. This is deferred revenue. Okay, future obligations that a company have. Yeah, future obligation that a company have that from money that has been collected. Uh, and then, okay, this is important to me to make this quick recap. All right. Since I'm going to be a business owner, or my intent is to be a business owner, or look myself as a business owner, um, operating activities. Okay. Then I look at the income tax payable as the another income tax payable, which are money that a company owns to the government based on how much income or how much revenue it made and the tax rate. So example of this are corporate taxes, where this is money that a company owns to the government. So it can be uh, on the city or on the state in the US. That's how it is. Okay. Withholding taxes. So I'm looking here at this. Okay. So on the US, typically as until 2021, it was a flat rate of 21% on taxable income. Okay. On taxable income. So you have corporate incomes. Then I look at withholding incomes, which are money that the employers retain. Okay, so when I look at withholding taxes, Investopedia. Mhm. So it's money that I employer deduct from a gross. So money that I employee deduct from a employer's gross wage and pays directly to the government. Funny thing is like the idea here is that the idea here is that simplify the process for employees and fight tax evasion. So instead of having to pay a huge tax, they do that periodically. Yeah, they do that periodically. Withholding taxes, or as they call this, the tax withholding is a way for the U.S. government to maintain it is pay as you go or pay as you earn income taxes. Okay, this is the way how the government collect money and to maintain their pay as you earn income tax system. Pay as you earn, either a system of income tax withholding by employers or income-based system for student loans repayment. Pay as you earn refers either to a system of income tax withholding by employers or an income-based system for student loans repayment. In the context of taxes, in the context of student loans, Pay as you earn requires employers to deduct income taxes. And in the context of student loans, pay as you earn is a U.S. federal loan repayment plan in which payments amounts are based on income rather than a fixed amount. Mm, Pay as you earn and pay as you earn explain and pay as you earn in use. Income contingent. Mhm. So the withholding taxes is money that an employer deduct from the employee wage gross and pays to the government. So the purpose of this is to for the U.S. government to maintain a to maintain a pay as you earn tax system, a pay as you earn income tax system, and to fight evasion by collecting this tax periodically. Mhm. By collecting this tax periodically. Okay. And I assuming that this withholding taxes, okay, and I'm assuming that this withholding taxes or this withholding tax in mhm, income taxes. Okay. Types of withholding taxes. U.S. resident withholding taxes. Investor and independent contract are exempt from withholding taxes, but not from income taxes that they're required to pay quarterly. Estimate taxes. Mhm. So investors and independent contractors are exempt from withholding taxes, exactly, but not from income tax. They are required to pay quarterly estimate taxes. If this class of taxpayers fall behind, they can become liable to backup withholdings. Mm. If this class of taxpayers falls behind, they can become liable to backup withholding, which is a higher rate of tax withholding set to 24. What is an estimate tax and who must pay it? Exactly, small business owner, freelancer, and independent contractors. They do not have taxes automatically withheld from their paycheck as regular employees do, and estimate taxes made by may be and estimate taxes may be made for any type of taxable income that is not subject to withholding. These include earned income, dividend income, rental income, and interest income and capital gain. Estimate tax. And most of those required to pay taxes quarterly and small business owner, freelancers or independent contractor. But this is estimate taxes a quarterly payment of taxes for the year based on the filler report incomes for the period. Quarterly payment taxes on the filler reported income. Exactly. On the filler's reported income for the period. Most of those required to pay taxes quarterly are small business owners, exactly. So these estimate taxes, which is something that uh, once I talk about the income tax payable as a business, which are money that a company owns based on how much revenue it made, how much income, how much net income it makes, and the tax rates. So example of this are corporate taxes, where now is money that a company owns to the government. Usually is a flat rate of 21%, depend of the company structures, whether it's an LLC, S corp, S or C corp. Withholding taxes, that if you have employees, you as a business owner, if you have employee, you uh, deduct, you collect from, yeah, you deduct from the employee's wage growth, from the employee wage, from the employee gross wage, okay? You deduct from the employee's gross wage a certain amount and pays to the government. This is for the US government to keep their pay as you go or pay as you earn income tax system. And also, the reason is that to fight tax evasion. So, if you're not working for a company, if you're not get, yeah, if you are now a, if you're an employee, and if you are provide is your, uh, if you're an independent or a trader or investor, okay, if you're an investor or a trader, right? If you're an investor or a independent, yeah, investors and independent contract are exempt from this, but they require to pay quarterly estimate taxes. Again, quarterly, you have to pay taxes based on your income. Most of those required to pay quarterly are small business owners, freelancers, and independent contractors. They do not have tax automatically withheld from their paychecks, as regular employers do. Mhm. So estimate taxes may be made for any type of taxable income that is not subject to withholding. These incomes earn income, or this include earned income, dividend, rental income, even for rental income, any income, earned income, dividend incomes, rental income, interest incomes, and capital gains. The Internal Revenue Service requires quarterly estimated tax payment to be filed by those who have income that is not subject to automatic withholding. So the taxpayer then files the usual paperwork for the full year and pays the balance due or requests reimbursement for an overpayment. Mhm. The quarterly filing system requires people and businesses to pay an estimate of the amount they will owe in taxes for the period. An estimate. They also file annual tax returns that determine their exact total tax due. Quarterly filing is required for those who do not have tax withheld from their income automatically. So the IRS often extends filing and payment deadline for victims of disasters like hurricanes, floods, and wildfire. If you have been affected by such disaster, you can consult IRS disaster relief announcement. Understanding estimate tax. Everyone is required to pay federal government taxes as they earn or they receive income during the year. In other words, income tax are pay as you go. Those who are employed Those who are employed, así, como vaya viniendo, vamos viendo. Como vaya, in Spanish, this is, como vaya viniendo, vamos viendo. Como vaya, como vayamos yendo, vamos viendo. Como vayamos viniendo, como vayamos viendo, vamos yendo. Those who are employed have tax withheld from their paycheck by their employee based on the W forms the employees complete. Those who have employed, okay, those who are employed have taxes withheld from their paychecks by their employees based on W form. Okay, the employees complete. Others need to make this payment directly to the government in the form for an estimate tax rather than waiting until the end of the year to pay when they file their annual tax return. People who are self-employed, independent contractor, investors who receive incomes and generate capital gains, bondholders who get interest incomes, writers who earn royalties on their work, landlords with rental incomes are all examples of taxpayers who must estimate the amount of taxes they owe to the government and pay the amount. Other examples of incomes liable for estimated tax include taxable unemployment compensation, retirement benefit, and any taxable portion of the Social Security. Yeah, estimate taxes are usually paid on the quarterly basis. Question is, estimate tax for business owner, individual including sole proprietary partners and shareholder of S corporation must make estimate tax payment on business ownership earning if the total tax on built-in gain exceed net income passive income tax and investment credit recapture tax in 1,000 or more. Corporation must pay estimate tax if the business is expected to have at least $500 in tax liability. In addition, employees who have too little tax withheld and thus owe tax to the government at the end of the previous year are responsible for making estimate tax payment. A business owner who report income on Schedule C at the same time work for an employee who have withheld may able to increase employers withholding. May able to increase their employers withholding so that it equals the person's tax liability for the entire year. In this case, the person will not need to pay estimate taxes on the side business. Okay. IRS Form 1040 ES is used to calculate and pay estimate taxes for a given tax year. A taxpayer who have no tax liability for prior year was a U.S. citizen or resident for the whole year and had the priority tax year covered 12 months. Funny thing is, as a new chat, as a Venezuelan independent contract, independent contractor providing web service to U.S. company is required to pay estimate taxes. Mhm. You earn income, you may require to pay estimate tax to the U.S. government. Generally, if you expect to earn 1,000 or more in tax, when you file your U.S. tax return, you're required to make estimate tax payments through the year. Estimate tax payments are typically made quarterly. To determine your estimate tax liability, you may need to use a Form 1040-ES, which is the U.S. estimate tax for individual form. This form will help you to calculate your estimate tax liability. It is important to know that the tax law and regulations can be complex, and there may be additional factors that affect your tax, such as it's recommended to consult with a professional tax. And you're earning income from U.S. source, you may require to pay estimate taxes. As a Venezuelan contractor, how do I know? Or as an Argentinian? As an Argentinian contractor, how do I know if I have to pay estimated tax to U.S. gov- government? To pay estimate tax to the U.S. government, you meet certain criteria. Generally, if you are not a U.S. citizen or resident alien and you are earning income from the U.S., you may be required to pay U.S. federal income tax on that income. These include income from self-employment, such as freelance or contract work. To determine if you need to make an estimated tax payment, you will need to estimate your U.S. tax liability for the year. You can use the form 1040-ES, which is the U.S. estimate tax for individuals form, to calculate your estimate tax liability and make your estimate tax payment. The amount of estimate tax you need to pay depends on your income, deduction, and credit, as well as the fact that the U.S. tax system is complex, and there may be additional requirements and exceptions that apply to your specific situation. So, allegedly, generally, if you are not a U.S. citizen or resident alien and you're earning income from the U.S. source, you may be required to pay U.S. federal income taxes. Based on what you mentioned, mm, based on what you mentioned, how can I verify this source? Specifically, the IRS publication. You can access publication 519 and other IRS publication and forms on the IRS website at can be complex. For tax purpose, an alien is an individual who is not a U.S. citizen. Aliens are classified as non-resident aliens and resident aliens. Publication will help you to determine your status if given. Correct publication taxpayer relief for certain tax deadlines to coronavirus. Mm, okay, so that'll be all for this video. Take care. Bye bye.